The American dream was once clear: work hard, earn a stable income, build a better life. For decades, this system worked. Income supported expenses. Savings built security. Owning a home was achievable. Education created opportunity. Jobs provided stability, and progress felt predictable. There was a structure, a path people could follow, step by step, with visible results. Effort translated into progress. Time created growth, and stability created confidence. But over time, the system began to change, not suddenly, but gradually. At first, the changes were subtle, almost unnoticeable. Easy to ignore, costs started rising. Housing, education, living expenses, faster than income growth, changing the balance. Rent increased, home prices climbed, education became more expensive. Daily living costs expanded. Wages increased slowly, but not enough to match rising costs. This created pressure. The gap widened between income and expenses, making it harder to build savings. People worked more, saved less. Effort increased, results decreased. At the same time, assets began to grow faster. Stocks, real estate, increasing in value. Markets expanded. Investment opportunities increased. Capital moved faster. Growth accelerated. This created a divide. Those who owned assets benefited from growth, others struggled to keep up. Wealth started compounding, but not for everyone. Only for those inside the system. The system shifted from income-based progress to asset-based growth. This is the key change. Income alone was no longer enough. It maintained survival, but rarely created growth. Assets became essential. Not optional, not secondary, but central. Financial markets expanded. Access increased, but understanding did not. This created imbalance. Opportunities existed but required knowledge, participation, and awareness. Those who adapted entered the system. Investing, building assets, leveraging growth. They shifted focus. From earning money to growing money. From labor to leverage. Those who did not remained dependent on income, facing rising costs. With limited growth, this created tension. Effort without progress. Work without advancement. Movement without momentum. Another factor is debt, used differently across groups. Some use it to consume, others use it to invest. This amplifies outcomes, positive or negative, depending on strategy and discipline. Debt can accelerate growth or increase pressure. It depends on usage, not existence. The gap continued growing, not because opportunity disappeared, but because strategy changed and awareness lagged. Technology also changed dynamics. New income systems emerged, digital opportunities, scalable income streams. Barriers reduced, access increased. Anyone could participate, but few understood how. Content became an asset. Digital products scaled globally. Platforms connected markets. Without traditional limitations, income was no longer local, became global, borderless, and scalable. But these systems require understanding. Systems, not just effort. Structure, not just activity. This creates complexity. Working harder was no longer enough. Working smarter became necessary. The American dream did not disappear. It evolved into a different system with different rules. The old model still exists, but is less effective in isolation, without adaptation. A job still provides income, stability, predictability, but limited growth. The new model emphasizes assets, investments, systems that scale, and long-term thinking. It rewards patience, consistency, and strategic decisions. Over time, short-term effort creates short-term results. Long-term systems create long-term wealth. This is the transition point. From earning to building, from working to leveraging, diversification becomes important. Multiple income streams, reducing dependency, increasing stability. Automation becomes powerful. Systems operate independently, reducing manual effort, increasing efficiency. This creates leverage, more output, with less input over time. Another important factor is behavior. Emotions influence decisions. Impatience breaks systems. Discipline creates systems. Discipline creates consistency. Systems generate results, and results compound. Most people understand this, but do not apply it because results feel slow. At the beginning, this is where most stop. Before growth appears, before systems develop, before compounding works. But those who continue reach a different stage, where systems stabilize and income grows. 3 key insights emerge. First, the system has shifted from income to assets. Second, costs rising faster than wages create pressure. Third, adaptation determines outcomes. The difference is not opportunity. Opportunities still exist, but they require awareness and strategic action. The American dream is still possible, but it is no longer automatic. It requires understanding and intentional decisions. It requires participation in systems that grow, not just systems that pay. The question is not whether it exists. The question is whether you understand how it works today and how to operate within it. Because the rules have changed. The structure has evolved, and the path is different. But for those who adapt, the opportunity still remains. If you want deeper insights into financial systems, wealth building, and economic change, explore more videos on Wealth Finance 61. Like the video, subscribe, and share your thoughts below.